Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss swing trading this week in the market, and we take a couple questions from the listeners.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40%
Right
is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
We're up 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in Raw.
Featuring Dan, Deity Dips,
And Hugh Henny.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Sunday, September the 4th. We're recording this on Saturday, college football Saturday. We got week 1 going on, War Eagle. You want to give him a go dogs? There you go, dude. A little SEC country, even though he's in New Jersey. I mean, he's a fraud, but whatever.
Who am I gonna root for? Rutgers? Come on. I do like
Probably,
Greg Schiano, though. I do like Greg Schiano. That's the boy.
So we're diving in to SPY. I know we talked about the trend of it. It was kind of funky, though. I mean, yeah, it was very clearly on a downtrend. And then, what was it, Thursday and Friday happened? Why did it pop up so much and then just get obliterated again? Was it just hey, maybe it's time to reverse? And then people were like, hey, 3-day weekend's coming up because Labor Day is incoming.
Is that the reason the market sold off?
I know it sounded Labor Day. Hey, dude, when you put it into perspective, it sounds fucking stupid. Okay, but you know how people like back in the day would be like, yo, like we're all 3-day weekends coming up. Yo, you know, sell-offs come. They're like, be careful. Dude, but the thing is, during COVID and shit, like that was a thing. Over a 3-day weekend, the shit could get drastically worse. It never just got better.
Like, I feel like it's like, oh, you know, after this weekend, you got to put your whites away. Also, you guys know this weekend, you know,
make sure to sell your SPY options.
Basically. Hey, but wait till 10:30, please.
Yeah, no, okay. So look, the weekend's coming up, long day. Crash the market. We're gonna halt it, destroy lives.
One day I'd like if like every active investor could all just get on like the same email thread and we're like, all right, now you 40 million buy at 10:42 Eastern time. And then it's like you got like
basically what happened with fucking GameStop, dude. And they just were like, nope, no more of this.
Yeah, can't have this happen. But like now all of a sudden all you individual investors have as much as institutions. Like, yeah, no. God, no, can't let that happen.
I'm real fresh on this because I just got done showing a girl my GameStop documentary. There's no bigger flex than just pulling up a documentary about yourself.
That is nice. I can't say the same.
I mean, you're in it. You're in it. I mean, they do show like a 40-second clip of the.
They put me in the credits.
I mean, you know,
if they didn't put
when
me in the credits,
when you feel pain, I feel pain. So it's like if I'm in it, you're in it. So,
you know what? You're right. I'm just there.
But I mean, hey, I guess people weren't like, let's sell our stocks, get your bathing suit, and fucking crank a couple Coors Light. And so
Billy, what price did you get filled at?
Yeah.
Damn it. 2 cents higher than me.
So my thing is like, but the action on Friday, it did seem a little weird. Like with the going back up to 4, just like gap up, and hey, you know what? Screw it. 3-day weekend.
Yeah, no, the action on Friday was really interesting, and it's that kind of action that makes me think that we got a ways to go. Previously we had talked about how I had missed the upside move from that 372, but and this was when SPY was at around 400 on the way up, and on the way up, I had said I couldn't be a buyer here. I just couldn't be a buyer. Now, obviously, I missed about an 8% move up, and that's a pretty, that's a nice size move up.
And that's if you play it perfectly, which you can't always.
Yeah, that's if you play it perfectly. Yeah, but I'm Hugh. Of course I did. You know what I mean?
Facts.
Just joking, guys. Of course not. So my point to this was that I knew that I had already missed such a large move, and I knew that I couldn't be a buyer above 400. And that's because, and it goes back to what we talk about constantly, is that I found a system that works for me. I found a number program that works for me, and 340 feels
and
like
you post those on Twitter every day, right?
Yeah. Well, the intraday moves, yeah, I post on Twitter, but I mean like for the long term macro fundamental, for me to be comfortable with the valuation, it needs to hit 340 first, and that comes from a few different valuations, but mostly from the price to earnings ratio. It still feels like everybody's really pricing it, because the other thing, and this isn't something that you can really put to a metric or like really quantify, but when you think about like any corporation, Apple, Google, stuff like that, they're all going to do creative accounting. And I say that like lightly, but also very seriously, because when we talk about like creative accounting, let's just say that you own a construction company, and you might write off like an extra $50 worth of materials, okay, or something like that. I don't know, like something that like is probably pretty shady, but like again, like if you get audited, like you pay the $50 and and you move on, or whatever the fine is on top of that. Well, when you're talking about like a $3 trillion company, that $50 turns into like
500 million.
Yeah, exactly. 500 million. So that's where it's like, okay, for me, at all times, these companies are putting their best foot forward. And it goes back to what we always talk about. These companies aren't going to come out and say, hey guys, like we're on the verge of bankruptcy. No, if they're coming out and saying they're on the verge of bankruptcy, they're bankrupt. They're bankrupt. But again, is that if they have a car that has potential of being released in the next 30 years, they're going to be talking about every investor relationship meeting that there is, and again, I don't blame them. I'm just saying that that's the way the game, that's the way the game works. Best foot forward at all times. And really never talking about the bad stuff until we have to. And so for me, when we're using just price to earnings ratio up front, 340 is the spot that we have to hit first for me to be comfortable to say, okay, now we're at fair market value. Now we're at, a really good spot, to where even though we're significantly higher than where we were 2 years ago, this is where it feels comfortable to start adding a long-term position to the market. And again, is that then the other thing that you add in is that, when SPY was at like 428 or whatever, it was literally the average bear market. Like within like 2 percentage points all around. The timing, the price, it just lined up perfectly, and that was the other struggle for me, that that I really couldn't buy that when we were literally inside just a bear market average rally. Like that's all we were doing. Like we were just inside an average bear market rally. So I said that I couldn't hit the, I wasn't gonna hit the upside.
Better safe than sorry.
Better safe than sorry. But the backside, and now we're going back 2 weeks. Now we're going back 2 weeks to, I believe, August 17th and August 17th. Oh no, sorry, August 23rd. August 23rd and 24th, I started a short position on SPY. And the reason I started this short position is that it's kind of like the way that I trade my levels during the day. When I trade my levels during the day, I have these key levels. And then based on those key levels, I'm looking for certain things to happen, whether it be base above those key levels, maybe failed follow through, which means reject off those key levels. I'm looking for a multitude of things. Well, just like I do it intraday, I also do it for swing trades. And so that level for me was 419. And so, obviously SPY had hit like 430, 431. And so over the next few days, we had got, the market had trickled down. And then now we were sitting at 416 on on August 23rd. And like I said, is that what I wanted to see was how it reacted at that 419 marker. We had hit it was like 419.20 was my level. We hit 419.90 and we got smoked. And that failed follow through is why I took a short position. And that short position, paid me about 5% in 6 days. And again, like I didn't capitalize the entire move. Like I was mostly out by Thursday. And I mean, we know Friday we hit 491. So, I didn't capture the full move, but that's a way where I can capture the meat of the move and my timing be relatively correct and also keep my risk really tight. Like if 2 days later, when we were sitting at like 416 or whatever, if we had gone back up, tested 419 and based above there, I would have been out my short position for like, let's just say a 1% loss tops, which would be still like 421 to 422. So I'm okay with I'll take that bet or that probability 10 times out of 10. Where I can sit there and say my upside is 5%, my downside is 2%, and again, that's an A+ setup for me. I'll take that 10 out of 10 times. And then we followed it up with Tesla. And Tesla, which was on Tuesday of this past week, I had taken a short position. I had said that I'd want Tesla up near that 290 level. Like right in pre-market, it hit 293, and I said, oh man, if it could get back up there, I would take a pretty big short position. Now Tesla's pretty volatile, so I don't typically I like to play 2 to 3 week out options. With Tesla, I took like a month out just to give me as much time as possible, with my target being 255 to 260. Bro, within 2 days, that thing went down 10%, and we were at like 262. You know what I said? I said, listen, the options went like 60%. They're a month out. So I have to take this gain. Because again, with options, you're on a ticking time bomb. And so I'm okay with taking that gain. Like, did it hit my 260? No. No, in fact, it was still 2.5% away from that. But I took that gain because that's like one of those things where even though my strategy said 255, 260, it's not linear. Ideally we pop back up and I get another, ideally we pop back up and I get another opportunity to short it. Like that's what I was looking for. And even still is that on Friday when the rest of the market got smoked, Friday it really didn't have that bad of a day. It closed at 270. So that was a good cover in my opinion. Because what if the market was up 1.5% on Friday? Tesla might have been at like 285. And then now it's like I'm basically, maybe instead of up 50%, I'm only up 10%. So that's one of those things where, I have a thesis, I'm looking for those A+ setups, but then my strategy is linear. It's not if it doesn't hit 260, I'm going to continue to hold it down. No, it went 10% in 3 days. I'm a nutcase if I don't take that. Yeah, on a blue chip. We're talking like billions and billions of dollars here. I'm a nutcase if I don't take those gains. And someone had sent me like, oh bro, like I took your levels and like I don't know why you just don't trade SPX. I do trade SPX. But like I'm not gonna throw 20% of my accounts at an SPX option, expiring tomorrow. Like, yeah, did it make 1,300%? Yes. But am I like I'm not a nutcase. I don't have that kind of risk appetite to buy tomorrow's expiration. I wish. But again, it's the same thing.
It's a blessing and a curse.
It's a blessing and a curse. But even like Friday off open, I shorted Tesla and Roblox that for intraday moves, and then midday I shorted Amazon and Google, and the Amazons I made 31%. They were 3 weeks out. In 50 minutes, I made 31% on 3 weeks out. Someone else messaged me that they made like 400%. I said, great, bro. Like, what kind of size position did you have in it? He's like, oh, like I had like 0.5% of my account in it. Great, I had 20% of my accounts at the Amazons. Guess whose account did better that day?
400%. Let me get my calculator once. 30%. It's close. But yeah, I think you turned out a little better. Yeah.
And I guarantee you that my option wasn't moving 10% for every 10 cents that Amazon was moving. I mean, obviously. But, like that's the way that like I reduced my stress inside these positions. Like trading's hard. Trading is fucking hard. Don't make it any more difficult and throw 20% of your account inside something that's, going to expire at the end of the day. Like at that point, this is what I was explaining to, I had a phone call with someone. I had a phone call with a listener actually yesterday. And, I don't know, sometimes I just give out my number, like, randomly.
Nice. That's probably smart. Yeah. I have another phone number for that.
But so I had a phone call with him yesterday, and I'm going over the math because he really has never really traded options, and he knows that like I'm pretty risk adverse, and he tells me, Hugh, I'm pretty surprised to hear you say that you trade a lot of options. I said, why? He said, well, because you're so risk adverse. I said, listen, options are what you make them. 90% of people lose. 90% of options expire worthless, but that doesn't mean that you need to hold them for that long. Obviously, and that's the type of thing is that if you learn about delta and the way that delta affects the option, you can use that to your advantage. So I said to him,
talking about the airline.
Yeah, the Greek goddess.
Oh, okay.
So I'm talking to him and I asked him 2 questions. I said, do you trade large caps? He says yes. I said, do you trade options? He says no, equity. I said, okay. What if 3 A+ set, or I said, how much in every position do you put into this, this position? Let's say an A+ setup. He said 60% of my account. I said, okay. I said, so what happens if you have 3 A+ setups at the same time? And he said,
180% of my account. Fucking margin.
Yeah, exactly. Yeah. When he goes to me, he goes, oh, well, I choose between the one or the two. And I said, but those A+ setups, you take 10 out of 10 times, right? He said, yeah. And I said, well, why don't you? And he said, because I don't have the money for it. I said, okay. So what if I told you that the same exact play, so you either make the same with equity or you lose the same with equity, but you use a 10th amount of that,
basically saying you can spread out your money a little more with this percentage gains with options. Like, yeah. Even if you did do the 60%, you could 20 and 20% with options. This guy's going to lose all his money incredibly fast if he's following all this. But
well, no.
Yeah, 100% of your account, good bit, like majority of it's in options.
So then he tells me, and this is the text that he sends me an hour later.
Like, what is a margin call?
Yeah, imagine, right? He said, I see how this could be solid because if I'm solid on the move with equities, then options should only solidify the gains to make it worthwhile. And again, I'm not saying that you should take 20% of your account or 60% of your account. I'm saying that if you're typically risking $100,000 on a trade, instead risk $10,000. But again, is that make sure that delta is the same and that delta is the move, so that if you're going to lose $500 on an equity trade, that's what you would lose on the option if it got to that level. And that's just the way that I like to still leverage my money so that I can take more A+ setups. And again, how many times do I have 7 A+ setups? Never. But how many times do I have 3? Probably 20% of the time. And when that happens, the last thing I want to be doing is worrying about how much buying power I have. That's all.
Yeah, dude. If your capital's fully deployed, you've got fucking issues, man. You may have a fucking gambling addiction. Well, moving on to some more basic shit, as some back to the basics, as we like to call it here. I know we just went over some intraday setups last episode. One thing you're more versed in, or at least used to be more versed in, whenever the market was applicable. I feel like I'm adding too many B's. Applicable. There you go. Applicable. I just kept saying applicable, like adding a bubble.
You need help with grammar. I'm your man. Don't worry.
So whenever the market's applicable for it, you like to do swing trades, man. And we just talked about intraday trades, but whenever the market is right for it, you do like to do a little swinging, do you not? I don't know. I mean, when there's a couple and there's another couple, you like to, you know what I'm saying? Swing.
I mean, like I said, is that I took those, I took the SPY trade short, I took the Tesla trade short, and those were swings. But the thing about today's episode that we really want to talk about was capturing not just like, so I have targets on most of my swing trades, but there are a few trades that are trend trades where you can capture 100%. And again, like, you're not going to capture 100% on SPY and stuff, but I mean, you could.
Depends on how long you hold it, man.
Yeah, it depends how long you hold it, but that was the big thing. And so it all comes back typically to The Complete Turtle Trader, which is the book that got me into trading and stuff. Not stuff like that. It got me into trading. And Dennis, who's basically he's this hedge fund manager inside Chicago. Grew up in the pits. He takes like 15 people off the street, and he turns them into $1 million traders, and a few of them into $1 billion traders. And I'm sure you guys have heard me talk about this before. I love the book. If you we're not sponsored, although I wish, if they want to sponsor us, come.
I don't know if you can get sponsored by a book. Like, who's sponsored by like Harry Potter? I
don't know, but either way, I mean, come sponsor us. Anyway, my point to this is that his whole strategy is that 8 out of 10 trades will not work. In fact, you'll be stopped out. However, the 2 that do work will go multi-baggers. And again, he's not someone who trades like $7 million companies. Dennis was trading commodities markets mostly, so as we talked about, was it 7 episodes ago? Soybeans, coffee, oil,
everything but onions.
Yeah,
Can't do onions. I don't know if you ever looked into it, dude. I know I talked about it. You should have looked into it, but no, you can't fucking trade the future of onions.
I should have. And so like I said, is that 8 out of 10 trades don't work. And that's a strategy where, again, you can catch the meat of the move, or more than the meat of the move. You're catching every part of the move, and you're expecting it not to work, because when it does work, it makes up for all the losses times 100. It's kind of like if you guys have ever heard of the 50 Cent VIX guy, you'll like this guy, Dan.
Okay.
He'll go. Nobody knows if I believe they're based out of London, but nobody knows if this is their actual strategy or if it's a hedge. But every 3 quarters, they'll come to the market and they'll buy up all the 50 cent VIX options. Okay, like we're talking like millions and millions and millions of dollars. And they're typically for like, I think it's like a year and a half out. So he gives himself a year and a half. And typically they go complete, 9 out of 10 times they go completely bust. But the few times inside the career that this guy's hit on his VIX options,
yeah, it's hard.
He makes like $100 million. So he'll spend, so like, let's just say for 3 years in a row, let's just say he buys like $9 million worth. And 3 year and a halves in a row, so what is that? 5 years, okay? He doesn't hit, or 4.5 years, he doesn't hit anything, okay? That last time, so now he's down 20 million. When he does actually hit it, he makes like 100 million. And so he only profits like once every 10 years. But when he profits 100 million. And that's kind of like the same strategy as this trend trading strategy and this swing trading strategy. It's something that I'm definitely trying to get better at, but it's not something that I'm great at. Again, because when it hits I have targets in mind, and when it hits my target, I have to take some off. And I don't.
Yeah, it's also got to be like a mental thing as well. Aside from just having to hold it so much, I mean, you're having to like you're expecting so many things to fail, which is just a shitty thing.
Yeah, no, exactly. And if you guys don't follow him on Twitter, follow the boy, Simple Ariel, and hang on, let me spell it because I want to make sure I got it right. But he is fantastic with this strategy. So it's Real Simple Ariel, and that's RealSimple And I've invited him on the podcast a few times. We're still working on that. But what he does basically is that he's a trend breakout trader. And so what that means is similar to Richard Dennis of Complete Trail Trader, is that 8 out of 10 trades, he doesn't look for profit. In fact, he'll get stopped out of. But the two that work really go hard. So typically I think his rules are within the first 3 to 5 days, he cuts some. And he'll cut like a chunk of his position just to lock some profit, because that's when they typically make the biggest move. Because again, they're breaking out on these larger time frames. Then once he cuts some, he doesn't close anymore until it closes beneath the 20-day moving average, I think it is, or it's the 50-day. I think it's the 20-day moving average. But this ensures that basically, if it hits the 20-day, he's not just going to get stopped out, and to ensure that short-term price trends don't really affect it that much. So even if the stock is down 5%, as long as it doesn't close below the 20-day moving average, he's still going to be inside the trade. And that's how he's been able to capture massive moves. And again, this is something where, he'll capture massive moves on whole sectors. Like I know that he loves uranium. I know that he loves some of the wheat. I know he loves solar. And that's how he's been able to really trade really, really, really profitably and really well. Now, again, I'm trying to get better at that because, again, this man will hold for months and months and months. Like, he doesn't care. If it doesn't close below that said moving average, he'll continue to hold. And I think it's really cool. And like I said, it's definitely something that I want to get better at. But going on, swing trades using technical analysis, like I said, that's one way to do it, and that's to capture really big movements inside the market. Now, the other thing and the other way to do this is similar to what we talked about with SPY and Tesla earlier. Okay, so I post my levels, okay? If those levels, depending how the price reacts at those levels, is how I'm going to trade it, and that's purely technical analysis. Okay, so I'm going to have a trend-based trade. And so I'm going to take the 180-day 4-hour, I'm going to put my levels on, and how it reacts there is how I'm going to handle it. Now, once I'm up a good bit, what am I going to do? I'm going to continue to move down my stop loss. But that has to be methodical, and there has to be reasoning
move up your stop loss?
Well, move down my stop loss, I guess, technically. But move up my stop loss move it up in profit.
Yeah. Okay, yeah. So basically a trailing stop loss that you're making manually.
Yeah, exactly. But the thing is that it has to be methodical, because it can't just be up.
You're just changing it to your levels, right? Yeah.
Mm-hmm. And so the thing that I really and a lot of other traders like is that if we're inside a downtrend, move that stop loss to the downtrend break, okay, on a larger time frame. And so that's something where, okay, you have your levels, you enter the trade because, let's just say, down, let's just say it hit that level and it got smoked, failed follow through. Now you enter the short position. Well, now your stop loss is right above that level that it failed, okay? Now you're going to ride it down. You're going to take some profits near support, and then let's just say it breaks through there. Now we have a proven downtrend that's confirmed. So now what we're going to do is that we're going to create that triangle. So we're going to take the support on the bottom and that descending triangle, and now we have our new stop loss, okay, which is going to be on that trend breakout. Okay, so when it breaks when it breaks that downtrend, that's now where your stop loss is. And I think that that's a really good way to handle swing trades where, you don't really know how far this can go down and you want to capture as much of the move, but you also don't want to you also want to have a reasoning for where your stop loss is put. And I think that this is an excellent way to do that. And those are the two strategies that I really like to use. That I really, like I said, I'm trying to get better at the first one. But those are really good strategies, in my opinion, similar to what we talked about intraday with the previous close and previous open and high of days and stuff. This is a really good way to handle that.
Do you why are you trying to change up your strategy to get this 8 versus 2 thing working? I mean, obviously you've had a strategy that worked for a long time. This 8 versus 2.
I'm not.
Okay. So you say you want to get better at it.
Yeah, like in theory I want to get better at it, but like I'm not like
it seems like a wild one. Like you have to
not the 8 and 2. I mean more like holding for the trend.
Okay.
Because I'm not so the difference here is that I'm not entering trades on a breakout. Like I'm entering trades after confirmation.
You're not expecting 80% of your trades to fail.
No, God no.
Okay.
No, in fact I'm expecting 80% of my trades to work. 85. For me 87% is what I'm looking for.
Where the fuck did you get 87 from? Was 85 a little too low, 90 was too high?
No, 87% is like based on my trades.
Oh, okay.
Like based on my strategy. Like that's what I'm expecting. Like when I enter a trade, I'm expecting 87% of them to work. But the part that I'm trying to get better at is holding for that trend. So the difference between my strategy and let's just call it like Richard Dennis and Ariel strategy is that they're entering breakouts. I am not. I'm waiting for confirmation.
Yeah.
But the part that I'm trying to get better at is holding for that full trend. Where like they don't have targets. Like they might have like some targets, but those are like loose targets. For me, it hits that target, I'm out.
Understood. You got anything else on swings before we go into these viewer questions?
Nope.
All right. This is good. So this is from a guy named Ken. It's hey guys,
I'm looking at that one.
Okay. Hey guys, I'm 41 years old with 2 children and have taken on the stock market since the COVID era. I'm not too proud to be the old guy taking advice from 2 fine young gentlemen such as yourself.
Ken, you're lucky I don't know you.
Yeah, I want to give you a big fat kiss on the forehead. What kind of trading would you recommend for an older guy starting out? Says myself, I'm 41. It's not old. You have a lot of time. You're a young gentleman. My goal is to both make some additional money as income as well as having some long-term security for my kids. I have a well-paying job and am able to trade all day if needed while working. Starting account size is about 30K. I know day trading and long-term investing don't go hand in hand. What would you suggest to get the best in both worlds? Big fan of the show, and as an avid fan of psychedelics, would still love to hear more of Dan's DMT story. Love you guys, Ken.
What's DMT stand for?
It's like a chemical. It's the one where I got drugged at the concert, where I thought it was. Yeah.
Yes.
So what kind of trading? So he wants money.
Wow, Ken sounds like a really interesting guy. Ken, you sound like you're fun, brother. I mean, when you started out, I'm 41 years old with 2 children and taking.
I didn't expect the left field turn. I'm also big into psychedelics, except I take them on purpose. I mean, don't worry. I do my fair share. I'll take some shrooms every now and then. Sorry, Mom. They grow out the ground though. But anyways, so he says he has a well-paying job too. But if he wants extra cash for right now, let's say take the kids to Disney World, maybe to fucking buy himself a nicer car, but also some security, maybe some college tuition for the kids as well. I know for the long term, you're going to recommend a Roth IRA.
Naturally.
Okay. So, but also since he can trade all day, you want that extra cash too. So kind of getting at it from both angles, You don't want to overdo it. I know that's for sure. And that's something, especially if you're starting your account size with 30K, you think automatically, hey, I got 5K of wiggle room. Because you know that you get you get under that 25K and things start to look a little dreary.
Yeah. So that was going to be my first point was that Ken, as Dan mentioned, we have a hunch that you chose $30,000 as a starting account because of the PDT rule. You figure, give yourself a little $5,000 wiggle room.
A little cushion.
Yeah, a little cushion. Now, I understand that you got into the market during the COVID era, and I don't know the depth to your trading experience. However, if there's one thing that I think every trader learns at some point is that you can lose $5,000 fucking quick, really, really fast. And I think that's like the one difference that a lot of people come to the market, and it's like it's just gone.
You don't want trading to become, instead of like a second form of income, like just a money sink. People like it that have good jobs that just put money in. One thing I don't like seeing is when they lose the money, they just keep putting it in. Got to keep themselves over that 25K mark, and they're just losing money.
So Ken, the ideal situation for you, it sounds like, is that you don't want to be taking, 2-cent scalps. Because it just sounds like, one, you gotta, you're able to trade all day. That's fantastic. But you got 2 young kids, and again, you're gonna, with this 30,000, it's a lot of money, but to capitalize.
He's 41, man. Those kids could be like in their 20s.
Didn't you say too young?
Oh, let's see.
Two children. Yeah,
children sounds young. Yeah.
Yeah, children sounds young.
Take that.
But what I'm saying is that you got a family. Like, you're not gonna be up trading like fucking crypto at 2 a.m. after putting little Johnny to bed at like 6 p.m. So my point to this is that the ideal situation for you sounds like you should be working on larger time frames, okay, and looking for like where you have an A+ setup, and that A+ setup might not come every single day. And so what I mean by that is that, well, first off, what you're going to do is that you're not going to use the 30,000. Like,
if you set aside 10 for it and just use 20 of it as like a booster to get you to that PDT, hey, I need it. But also that comes with a lot of self-control and discipline, because we've all been in swings where we're like, dude, this is the time to add. And guess what? A lot of times it's not the time to add.
Yeah. And so you're going to be playing around a little bit, and you're going to be playing around with obviously with trading and different strategies that you're going to find on YouTube, and hell, even DM us. Like, we'll talk more in depthly about like our strategies and stuff like that. But the biggest thing is that you're going to pay market tuition. Now, how much market tuition you pay is going to be up to you, because if you use $25,000 per trade, your market tuition is going to be a lot higher than if you use $2,500. Remember, this is the long game. This is an investment. Even though you're going to become a trader and you're going to lock those profits quicker than a normal investment, this is an investment. This isn't a 4-month timeline. This is you should be pointing towards profitability by the end of, you should have a strategy by the end of the year. Within 6 months of next year, you should be looking for profitability. So really, you're looking at an 8-month timeline right now, minimum. Okay, and that's even if the market gods come down and bless you. Okay, now the good thing though is that you're entering the market at a really interesting time. It has a lot of volatility, and we're just getting out of summer. So this is the perfect opportunity to enter, because now you do have about an 8-month window before next summer. So this is good. Now, like I said, is that I would focus on the larger time frames, and I would go really, like I said, easy with it. So like Dan said, use $5,000 to $10,000 on a few different strategies and keep it really, really simple. So as we talked about with levels, start to find support and resistance. And so if it fails off that level, maybe take a month out put, something like that. And if your resistance is, if your support is 2% lower than that, when it gets to that level, now cover that position. Stuff like that, to where, you're not going to, you might make $50, you might lose $50, but that's it. And just get used to, being in trades, kind of working around trades. Because the one thing that I know that I'm not great at is that, when I have a short position or a long position on and it's a swing trade, I'm always looking at the market, no matter what. Even if I have stop losses in, even if I have shorts or alerts in, I'm still always looking at the market. So the biggest thing to remember is, again, this is an investment. So you have a minimum 8 to 12 month timeline. Number 2 is that you're going to pay market tuition. How much is up to you. Just know that you're going to pay it. And the third thing is that find what kind of personality you are. Like I said, is that to me, if I were inside your position, I'd be looking at the 15-minute time frame and above. Because again, is that I have young kids, I work a full-time job. I'm not trying to scalp stuff for 20 cents. I'm looking for 2%, 3% moves on the overall indexes or like the overall blue chip stocks. But again, is that maybe your personality is like you like to just bet heavy and you like to, take a 20-cent scalp. And that's okay too. Find your thing.
Yeah. And like I said, I mean, as time goes on, you may find the time where it's like, damn, my good paying job, thank God I have it. And also I didn't lose all this money. And now the market is fucking in shambles. And now it is the time to buy. Poor get poorer, the rich get richer type situation, man. It's always good to, don't lose the capital. But yeah, no, I think, like we said, how much experience you got during the COVID era and then transitioning that to this post-COVID market is going to be your biggest thing, I think.
Yeah.
Good.
And the last thing on your long-term investing is just remember, as long as you keep adding to the position, you really can never go wrong, So
as long as the stock's not fucking failing, like we're talking about good stocks, not like fucking penny stocks.
Yeah. Yeah. And as far as like long-term investing, really just, keep adding to, it
just
sounds like
just
so
hodl, man.
Yeah. So you got 20 years, maybe look at like a 20, what would that be? Like 2045, Vanguard timed, retirement fund, something like that, and that might be perfect for your long-term investing because then they're going to take you in and out of certain, certain risk levels based on, your age. So when you get 50, they're going to take you from, let's just say you're at like a 5 out of 10 risk right now. They're going to bump you down to a 3 out of 10 risk, as you get closer to retirement age. So just a lot of different things to think about. But again, is that they mostly handle that for you. So that's what I typically like to recommend about with long-term investing. But like I said, is that as far as like day trading and short-term trading, it's an investment 100% and it's the long game. Like you're 41, if you get to a point to where, you can make $200,000 a year, on 200-300 trades per year, looking at larger time frames, like anybody would take that. But if it takes you 2 years to get there, of course, everybody would still take that. But if I were to tell you that it's a 12-month investment, most people are like, fuck, like you want me to do this for 12 months and have nothing to show for it? You know what I mean? But again, is that it's not about the 41-year-old Ken. Yeah, it's not about the 41-year-old Ken. It's about the 45, the 50-year-old Ken.
Oh, that's deep, dude. And for the DMT, yeah, no, dude, we were just at a concert, man, and someone gave me a dab pen, and I've been wanting to frequent the vegetation and let it rumble in the jungle inside of me and get all the little weed and THCs in me, and I'll smoke it out of a water bottle, I'll smoke it out of a glass can, I'll smoke it out of a bugle. I think is definitely one of my stranger, like the snacks that go on your finger look like witch hands. So I expected to get a little weed out of this dab pen, as you do from dab pens. And the person providing it for me, another FinTwip figure, all y'all know, gave it to me. And I hit it, and I mean, we were at a concert for a good bit, and I wanted to get a little high, you feel me? So, I've been there before. I can handle my weed. So I really, I'm talking, I sounded like the reverse Big Bad Wolf, and like the reverse version of the Big Bad Wolf in the Three Little Piggies. Like I was sucking the thing out of this thing, dude. And I realized it didn't really taste like weed, man. And yeah, very shortly after, I was like, hey, is this weed? And he's like, no, dude, DMT. And I had never done DMT prior to this moment. Just thank God we were at an EDM concert. So it's like the proper place for it. And we were in a section. So it wasn't like I was just out in the wilderness of general admission, right? And I was pretty upset with the person that provided it for me, obviously. But at the same time, I was vibing. So I just had like a really upset face as I was like bouncing back and forth listening to Tiesto. So interesting enough, but hey, shit happens. So we'll chalk that one up to the game. But okay, so a little funny little anecdote time. So like I mentioned last episode, I went to Denver. Went with this shorty. Went with this little. Actually, I don't know if the dad's listening now. I went with this girl to Denver.
and wait. I won't interrupt you, but if he's not listening, what about his friend?
Yeah, well, maybe they're just like old listeners or something. But anyways, the girl I went to Denver with to this little Zed concert was she was like, so I called my dad yesterday.
Casually going to Denver with a girl. I can't. He's in love.
Oh, don't even. I love, dude. Anywhoozin, sorry, I'm blushing. Anywhoozin, she's like, I called my dad, and she was like, is Dan famous? And she's like, what do you mean? And her dad was like, well, one of my friends called me and was like, hey, how is your daughter with Dan? And she's like, what do you mean? He's like, on his Instagram story, he's posting pictures of her. And I guess she didn't inform him that we were fucking super dope guys or something. I don't know. And so obviously I'm in with the family now because until he listens to the podcast, obviously, and finds out I'm just doing DMT at Tiesto shows on accident. But I'm just getting raving reviews from our listeners to Girls I'm Talking To's families. So that's cool. Definitely didn't expect that. But I feel like, I don't know, like Tom Cruise going to meet, like Leonardo DiCaprio going to meet like one of his 25-year-old girlfriend's parents,
There you go.
Yeah, respect, dude. Okay, guys. Well, I hope your team won yesterday when you're listening to this. Vinny, we got War Eagle. I'm gonna go put a jersey on and fucking strut my way on down. And I hope Bo Nix gets fucking destroyed by those Bulldogs. All right, guys. We'll see you next time. We love you. Good luck trading. And Ken, stay safe, dude.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.